anyone that says the big banks are going to come and eat everybody's lunch, especially in this purchase context, throw that out to your consumers and educate them on this.
I'm sitting here with Julian Hebron, founder of The Basis Point.
Hey,
And
right.
How are you doing?
I'm doing great.
You enjoying the conference?
Yes, it's very busy as usual.
Absolutely, every single year. One thing that I've noticed is that the optimism level is a lot higher this year than it was last year.
Absolutely.
So
yeah.
that's always a good sign. Well, I want to start off just for those that may not be familiar with you and your work and
Sure.
what Basis Point is all about. Take just a minute or two and kind of tell us, why did you found Basis Point? What was kind of your background that led you to doing it, and what your focus is? Like, why do y'all exist, and what do you do for the industry?
Yeah, thank you. So I've been in the industry for 16 years. I joined in 2003 from the money management business.
Okay.
And I began my career in marketing. So I was working for a boutique money manager in Chicago that was acquired by a big global bank called UBS.
Heard of it.
So I cut my teeth doing big, large-scale marketing for the big banks, and became an originator in 2003. Rose up to be a top producer, then started running branches. Eventually ran a joint venture between my mortgage bank and a real estate company in San Francisco. That company since got bought by Compass.
Okay.
So that's when the tech disruption first started hitting.
Right.
And then I went to post-crisis to run the builder division at Wells Fargo, and ran their largest builder division in the nation. And then went to work for Loan Depot and helped them launch the Mellow Home brand.
Sure.
So I've been kicking around in the industry for quite a long time, and I've had the Basis Point as a mode. It was a little bit more of a personal brand and a way to kind of provide some analytics and commentary, but I had always done some consulting on the side.
Good.
And I took the consultancy full time about 16 months ago, because now the disruption is full, and I think there's three categories. There's the incumbents, the startups, and the tech firms.
Right.
And the way we have our capabilities for the Basis Point, we have like a three-way Venn diagram, and the Basis Point advises kind of from the center of that, because they're all converging on each other.
Of course.
And so whether you're a startup or an incumbent lender or bank, or whether you're a tech firm providing services for either of those,
right.
Everybody's trying to figure out where they fit in all of this and what to do. And so that's where we serve all three of those kind of core components of the ecosystem.
Gotcha.
Serving predominantly in a sales and growth strategy capacity.
Well, I connected with you, I think, a little over a year ago. I've been reading your analysis, reading a lot of your articles for probably about the last 15 months, and what really struck me about the articles that you produce is both the analytical nature combined with the strategic, combined with infused with a little bit of humor.
Yeah.
And I really, I have a deep appreciation for that. Being a former English teacher, that really resonated with me.
Thank you. Yeah.
And the analytical side, I think, is a component that a lot of people in the industry miss. That they tend to be very reactionary. Whereas if they would just take time to kind of look at the data that's already readily available, as you and I were discussing, then it would do so much more for their strategy. So speaking of analysis and speaking of strategy, I know that you and I were just talking about one of the sessions that you were just in. So why don't you share a little bit about some of the data that was shared in that session? Yeah,
well, and I agree with you, and I don't knock anyone for that, because it's all production. We live in a production world.
Right.
I've done production and run production, and that's what people have to think about. You've got to watch your deals.
Right.
With that said, having a little foresight does help, and so Mike Frantoni, the MBA's chief economist, just gave the October update. They update these numbers monthly, and as you and I were talking about, nobody really looks closely, but let me do a quick recap. The headline, I'll lead with the headline, which is that we're heading very starkly into a purchase market in 2020, and everyone's having a good time right now. So refis, $326 billion in extra refis in 2019 versus 2018.
Right.
$326 billion in refis just kind of fell from the sky.
That's
all why everyone's
to the
so
drop
busy.
in rates?
Yes.
Yeah.
So, and as we know, rates dropped approximately, as much as 1.5, but it's been fluctuating between 1.5 on the quarter. So yes, you got to make hay while the sun shines.
Of course.
What's going to happen though is about 194 billion of that refi business is going to go away in 2020, according to today's projections that were just released. Most of that fully drops out as you move through 2020. So Q1's going to look pretty similar to right now. Like there's still plenty of opportunity, but it drops off pretty sharply after that. And then we move squarely into a purchase market, which is about 1.27 trillion-ish in purchases alone. So this market is gigantic and a huge opportunity for everybody. By the way, rates are, for the average for the year about 3.8. We'll end up at this year. We would be at approximately 3.7-ish for next year. So we're going to hold on rates, but all that refi business will be kind of sopped up. That's the whole thing.
Is that largely a function of the fact that the folks who were eligible for refis or where it was a good move for them to refi have probably already done so? Is that the reason?
The industry's so efficient. We're all very good at this. That's the great thing.
Yeah.
And so that's exactly why.
Okay.
Right? With that
Makes
said,
sense.
though, if you look at Q1 and Q4 of 2018, when refis were, as we just said, 326 billion fewer than this year.
Right.
Profitability was negative $117 per loan in Q1 18 and minus 200 per loan in Q4 of 18.
Right.
We're going to, according to Mike Frantoni, we're going to start looking similar in the later quarters of 2020, at least according to today's projections. And all that points to, let's focus on this 1.27 trillion in purchases that everyone has access to, right? So if we look at the data, the other thing that I think is really interesting, everyone talks about how many leads are available, but it's real simple. Like if you do new and existing homes, there's about 6 million deals a year for our entire industry to share. So if you don't have your act together on your purchase marketing, you're going to get caught flat-footed. Same with refis. And as we know, I won't go so far as say it's a holy war, but there are folks that are great at refis and there's folks that are great at purchases, both producers and whole companies.
Right.
I think your company is one of these companies that has a marketing mindset and understands how to kind of provide this longer lead education that it takes to win purchase business. It's different. It's not just a price game.
Correct.
But you've got to do the education and the engagement.
Yes.
But I just can't emphasize enough, these numbers are very stark.
Yeah.
And institutions that you work for, if you're a loan officer, are going to start pressuring you to make adjustments and show that purchase business. And then, of course, the folks that are great at purchase already know this.
Correct.
But that's the math, right? Like, it's new and existing homes total about it's actually 6.16 million units that will change hands next year.
That's MBA's numbers?
That's NAR's numbers, actually,
okay.
right? So I'm kind of mixing now.
Sure.
But that's, that's not even, existing is NAR and new homes is from Census.
Right.
But if you combine them, it's about 6.16.
Gotcha.
So these are all these data sources that are floating around in my head.
Well, you gotta have the ability to make sense of the
Yeah.
data and connect the dots
And that's why it's
in the right way.
for your audience, it doesn't matter where they're from.
Right.
That's the number. 6.16 new and existing homes million will trade hands next year.
Right.
That's the whole opportunity set.
Absolutely.
And if you look at our whole industry, you're gonna have to fight for that.
Yeah, you are.
And
you pretty much touched on it just a second ago when you said that education is educating the consumer.
Yeah.
Is part of the key, and that's at Thrive. That's certainly a huge focus for us. And you're starting to see that if you follow the mortgage industry, follow any influencers in the mortgage space, you're starting to hear a lot of people beat that same drum.
Yeah.
That it's not about your pricing model or broker versus retail or big bank versus independent bank. It's now becoming a situation where who's getting the consumer's attention first, and grabbing and keeping a hold of that attention, and then you start to see a lot of these other factors come into play. The economic factors we have zero control over independently.
Yeah.
But you have to be wary of what's going on and be able to make those adjustments. And that's one of the reasons why I like reading y'all stuff so much, because it's not just, I think you and I were talking yesterday, it's not just straight up reporting.
Right.
I mean, there are sources for that are very good.
Yeah.
but where the LO who cares about this information, where they can really dig in and get their teeth in, is in the analysis and reading multiple sources, not just yours, but multiple sources, and forming their own opinion and their own strategy of what they need to do.
Well, one of the reasons I started this 12 year in November, it'll actually be 12 years, and I started it when I was producing as a way to not answer the same questions all day, every day during every consultation, and that sensibility stays.
Yes.
So it is definitely written. It's written actually for the consumer, but through the lens of, I can't believe I have to answer this question again. But that so for any LOs and managers out there, like that's how we roll, which is like it's there to serve the consumer, but with this voice that's like, here's actually what to do. It's not just spitting out all these numbers.
Right.
But one thing I do want to share, if you don't mind, with the rest of your audience too, is that we talk, we hear all this stuff about like, oh, well, independent mortgage banks are single product shops and the banks are going to kill them and all this stuff. This is another great stat from pulling out of this conference today. So both in purchase and refinance, like the independent mortgage banker's share of market, respectively in purchase and refinance is 55% of the market and 54% of the market in purchase and refi. That's IMB market share. That's 2018, and I'm going to just pull up to make sure I get this absolutely right. If we compare that to the banks, for large bank market share in purchase, 20%. That's compared to 55% in 2018 for IMBs. And then on the refi side, again, 54% market share for IMBs, 24% for large banks, large depositories. So I want to leave everybody with that. Like, anyone that says the big banks are going to come and eat everybody's lunch, especially in this purchase context, throw that out to your consumers and educate them on this. There's a reason that market share is so substantially, it's double.
That's correct.
It's double the market share. And the reason is because the IMBs do take care of the customers.
Absolutely. I want to use that quote right there for our next marketing cloud, because you're absolutely right. I mean, this is the thing that we do. We do this stuff all day, every day.
Yeah.
We don't worry about opening checking accounts and savings accounts. I mean, they're very good at that. We would stink at it.
Yeah.
But where we excel is doing mortgages and being able to sit down with a consumer, look at their financial situation, listen to them, talk about their goals, and be creative in coming up with a solution that is going to serve their best interest, financially speaking, for the long term.
And we all know that, and I think everyone is really strong on that message.
Right.
This is the math.
Yes.
This is the pure statistical rationale that says everything that everyone talks about in terms of actually taking care of the customer is very real in those market share stats.
Very much.
And it's so profound, and I just hope that sinks in for everyone, because it's a huge deal.
Absolutely, absolutely.
Yeah.
Well, Julian, thank you very much. I know you got a busy schedule.
Appreciate
Thank you for taking time out of your day to meet with us.
All right.
And it's a pleasure reading your stuff and getting to interact with you face to face.
Thanks so much.
All right. Excellent. Thanks for your time.
See ya.